Henry Chen represents SNZ Holding at Digital Assets Week Asia and hosts thousands at Ethereum Hub meetup in Hong Kong each year. Digital Assets Week Asia brings together leaders from across global finance, regulation and digital assets to examine the forces shaping the future of capital markets. At this year's event in Hong Kong, Henry Chen, Chief Business Officer of SNZ Holding, joined representatives from Invest HK, Fidelity International, Amina Bank and Bitrock Capital for a panel discussion on institutional adoption, capital allocation and the expanding role of digital assets in global portfolios. The panel, titled From Curiosity to Capital, focused on one of the industry's central questions: what it will take for digital assets to move from a specialized market into a more established part of institutional finance. The discussion centered on matters that have become increasingly important to investors and regulated financial institutions, including governance, compliance, market infrastructure and the kinds of products that fit within traditional risk frameworks. Henry said the tone of those conversations has shifted in recent years. Institutions are less interested in speculative cycles and more focused on how digital assets can improve settlement, collateral mobility and portfolio diversification within a clear regulatory framework, Henry said. There is growing demand for compliant, transparent yield products, whether via tokenized T-bills, on-chain money markets or curated access to DeFi strategies with strong risk management and reporting. Henry arrived at that discussion with experience drawn from both traditional finance and digital asset markets. His career includes strategic and leadership roles at KU Holdings, parent of KuCoin, Summer Capital, Goldman Sachs and UBS, giving him a perspective shaped by investment banking, private capital and digital finance. That background has informed his view of what institutions require before they move from observation to execution. In a bank, product innovation often follows regulatory guidance and client demand, Henry said. In crypto, innovation frequently comes first and the regulatory and institutional frameworks catch up later. Henry Chen. We try to be a bridge between builders and institutions. Henry Chen's recent work in Hong Kong extended beyond the panel at Digital Assets Week Asia. He also planned, hosted and organized a full-day Ethereum meetup during Consensus at the Hong Kong Ethereum Community Hub, an event that drew more than 1,000 sign-ups and featured about 20 speakers across 3 panels, 1 fireside chat, 2 keynote speeches and 1 workshop. The event brought together developers, founders, investors and enterprise participants from across the Ethereum ecosystem. That mix was part of the point. In digital assets, the market often speaks in separate rooms, with builders focused on technical development, investors focused on capital formation and institutions focused on compliance and operational standards. Events that bring those groups together tend to reveal where the market is heading and where the gaps remain. For Henry, the meetup reflected a different kind of leadership than appearing on a conference panel. Organizing a full-day program at that scale requires more than subject matter expertise. It requires the credibility to convene a broad group of participants, the judgment to shape a relevant agenda and the operational discipline to deliver an event that serves multiple audiences at once. The Ethereum meetup was designed as a half-day forum rather than a narrow technical gathering. Its programming created room for discussion across development, investment and enterprise adoption without reducing the conversation to a single constituency. That structure reflected a broader view of where digital assets are today. The sector is no longer defined only by code or capital. It is increasingly shaped by how those groups interact. We try to build a bridge between builders and institutions, translating highly technical concepts into clear business and regulatory language, and vice versa, Henry said. That kind of convening work has become more important as the market matures. Institutional capital may be paying closer attention to digital assets, but adoption still depends on whether technical innovation can be explained in terms that risk committees, compliance officers and operating businesses can evaluate. By the same token, builders need to understand what institutions actually require if they want their products to move beyond early adopters and into wider use. The Hong Kong meetup served that purpose in practical terms. It offered a venue where participants from different parts of the market could engage one another directly, rather than through second-hand interpretation. In a sector still trying to convert momentum into durable infrastructure, that kind of forum can carry more weight than a single headline or market cycle. SNZ Holdings' position in a changing market. Henry Chen's presence at both Digital Assets Week Asia and the Ethereum meetup also reflects the broader mandate he is carrying at SNZ Holding. As CBO, He is focused on positioning the firm as a long-term partner to both crypto-native builders and traditional financial institutions and enterprises, particularly as Asia and Hong Kong continues to emerge as a key market for digital asset infrastructure. That assignment comes at a time when the sector is being tested less by novelty than by standards. The question is no longer whether digital assets can attract attention. It is whether firms in the space can build operating models, governance structures and market relationships strong enough to support institutional participation over time. Henry said that requires more than technical fluency or market access. It requires credibility. I am focused on positioning SNZ as a long-term, credible, capable and resourceful partner to both builders and institutions, both crypto natives and traditional finance and corporates, and to both East and West in the digital finance ecosystem, with a particular focus in Asia, Henry shared. That emphasis on long-term credibility runs through how he describes the business. In his view, governance, compliance and reputation are not secondary concerns or constraints on growth. They are the preconditions for building a platform that can last beyond a single market cycle. In digital finance, governance, compliance and credibility are not nice to have, Henry said. They are the foundation of any platform that wants to outlast a single market cycle. He later added, "We should not be afraid of risk, and neither shall we undermine the risk. We need to see all risk scenarios while having sufficient mitigants. In practical terms, that means being deliberate about which opportunities justify the complexity that comes with emerging markets. It also means resisting the tendency, common in digital assets, to confuse speed with discipline." Henry said the firm's best position for the next phase of the market will be the ones that can combine innovation with structures institutional counterparties recognize and trust. For SNZ Holding, that makes Asia an important proving ground. Hong Kong is becoming increasingly important venues for regulated digital asset development, tokenization initiatives and cross-border market activity. Firms operating there are not simply chasing growth. They are working in jurisdictions that may help define how digital finance is built and supervised in the years ahead. Henry explains what the next 5 years may look like. Henry's outlook for digital finance is not built around a sudden break between traditional markets and blockchain-based systems. It is built around gradual incorporation. He said he expects digital finance to move closer to the center of global capital markets over the next 5 years, driven by tokenization, programmable assets and more mature regulatory frameworks. In that environment, many financial products may be issued and managed on-chain even if the end user does not engage directly with the underlying technology. I expect to see digital finance move from the periphery to the core of global capital markets, driven by tokenization, programmable assets and more mature regulatory regimes, Henry explained. We will likely see a convergence between traditional financial infrastructure and blockchain rails, where many assets, securities, funds, collateral, are issued and managed on-chain, even if end users do not always see the underlying technology. He also pointed to payment infrastructure as an area where blockchain and stablecoin systems may have more immediate relevance, especially in cross-border environments where institutions and corporations continue to face delays, cost frictions and operating limitations under current settlement models. Taken together, Henry's appearance at Digital Assets Week Asia and his role in organizing the Ethereum meetup in Hong Kong offer a straightforward measure of where he is working. One forum dealt with institutional capital and the standards required for deployment. The other brought together the developers, founders and market participants building the systems institutions may eventually use. That is where much of the real work in digital finance now sits, not in broad claims about disruption, but in the slower process of making new market infrastructure credible enough for serious adoption. Digital finance is entering a phase where credibility, governance and execution matter as much as innovation, Henry said. The opportunity now is to build systems that institutions can trust without losing the openness and technical progress that made this sector worth paying attention to in the first place.